Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I am going to discuss about ITR forms for assessment year 2026-2027 released. Who should use ITR-1 and when to opt for ITR-2? With another tax filing season approaching, it's time for individuals to start preparing well in advance. The government has already issued the income tax return forms for the assessment year 2026-2027, giving taxpayers an early opportunity to organize their financial information and choose the right form. ITR forms for assessment year 2026-27 notified. On March 30, 2026, the Central Board of Direct Taxes (CBDT) notified ITR forms 1 to 7 for assessment year 2026-27. This covers a wide range of taxpayers from salaried individuals and pensioners to professionals, businesses, trusts, and charitable institutions. Key change in ITR-1, Sahaj. A notable update in ITR-1 is likely to benefit many taxpayers. The form now allows reporting income from up to two house properties, an improvement from previous years when even owning two properties, one self-occupied and another rented, forced individuals to use more detailed forms like ITR-2 or ITR-3. This revision is particularly useful for salaried taxpayers with one primary residence and a second home, pensioners earning modest rental income, individuals with simple financial structures but multiple properties. Who can file ITR-1? ITR-1 Sahaj is designed for resident individuals with straightforward income sources. You may use this form if your total income does not exceed rupees 50 lakh, you earn income from salary or pension, you have income from up to two house properties, you have income from other sources such as interest, dividends, or family pension not covered under special tax rates. You cannot use ITR-1. You are not eligible to file ITR-1 if you have business or professional income, you have short-term or long-term capital gains under Section 112A exceeding rupees 1.25 lakh, you earn income taxed at special rates, lottery winnings, resources, etc. You have foreign income or foreign assets. Your income involves apportionment under Section 5A applicable to specific cases in Goa and Union Territories. You are an NRI or resident not ordinary resident. If any of the above applies, you must shift to a different form. When should you file ITR-2? ITR-2 is meant for individuals and Hindu undivided families who do not have business or professional income. This form is suitable when the financial situation is more complex than what ITR-1 can accommodate. You should file ITR-2 if you earn capital gains, short term or long term, you hold more than two properties, you have foreign income, foreign assets, or foreign bank accounts, you own unlisted equity shares, you have income from more complex financial instruments, you need to club income of a spouse, minor child, or other family members, your total income exceeds rupees 50 lakh. When ITR-2 cannot be used, you should not file ITR-2 if you have income from business or profession, you receive salary, interest, bonus, or commission from a partnership firm. This counts as business related income and requires ITR-3. Why choosing the right ITR form matters? Selecting the correct form is crucial. Filling with the wrong ITR form can cause your return to be classified as defective. This may delay processing, require corrections or refilling, and could even lead to penalties if not addressed. With the early notifications of forms and the relaxation introduced in ITR-1, most taxpayers will find the filing process slightly more convenient this year. Even so, the smartest approach remains unchanged. Start early, choose the right form, file accurately. Conclusion. With the ITR forms for assessment year 2026-2027 released ahead of time, taxpayers have a valuable opportunity to prepare early and avoid last-minute stress. The revision in ITR-1, now permitting income from two house properties, offers welcome flexibility for many salaried individuals and pensioners. However, selecting the correct form remains essential. Whether you qualify for the simplicity of ITR-1 or need the more detailed structure of ITR-2, filling with the appropriate form ensures smooth processing and prevents your return from being marked defective. As the new tax season begins, planning early and filling accurately are the best ways to make your compliance journey easier and hassle-free. Disclaimer: the information provided above is for general awareness and educational purposes only. Tax rules, eligibility conditions, and filing requirements may change based on government notifications or individual financial situations. Readers are advised to verify details from official sources or consult a qualified tax professionals before filing their income tax return. The author is not responsible for any errors, omissions, or actions taken based on this content. Thank you very much for your patience. Request for like, subscribe, and share.